figuring out in your ecosystem who are the players. As you said in the advice of how to get an angel investor, writing that first check is learn the energy of the ecosystem. I love what you said about that.
Welcome to She Invests. Join us every week for conversations focused on the growing number of female angel investors, the real unicorns. You'll hear from existing female angel investors, VCs, and fund managers on their investment thesis. From deal flow to exits, they will share the best practices that contribute to their success. Female angel investors will be equipped with the tools and resources to confidently activate their capital in order to make an impact in their community and the global economy. With your host, active angel investor and founder of Hera Angels, Dr. Silvia Ma.
I am truly honored to have Angela Lee on the She Invests podcast today. Angela Lee is an educator and entrepreneur. As Chief Innovation Officer and Associate Dean at Columbia Business School, Angela teaches highly rated courses in strategy, leadership, and entrepreneurship. She is also founder of 37 Angels, an angel network that invests in early-stage startups and activates new women angels through a month-long investing bootcamp. Angela started her career as a product manager and then consulted for Fortune 500 clients at McKinsey. 37 Angels is her fourth startup. Angela is a sought-after expert on CNBC, Bloomberg TV, and Fox Business, and is regularly featured in media outlets such as Forbes, Huffington Post, and Fast Company. Entrepreneur magazine recognized Angela as one of the 6 innovative women to watch in 2015, and Inc.com listed her as one of 17 inspiring women to watch in 2017. So as you can see, Angela is a wealth of knowledge and is an inspirational entrepreneur and angel investor. Welcome to the show.
Thank you so much for having me, Silvia.
So Angela, we talk a lot about 37 Angels. We talk a lot about that education for female angel investors. Why did you start 37 Angels, and what was that impetus?
Yeah, so I started 37 Angels for a couple of reasons. One, in 2012, had been angel investing for 4 or 5 years, kind of haphazardly as you do. And I wanted to do it more thoughtfully, and I wanted to join an angel network. And so went around to a lot of the kind of big players here in New York and just kept walking into rooms filled with old white men and was asked questions like if I was lost or who I worked for. So a lot of it was that I wanted to create an angel network that I wanted to be a part of. And the other thing that was interesting to me was I am fiercely supportive of female founders, but as an investor, wanted to be able to invest in male and female founders. And then the last thing is my day job is Chief Innovation Officer at Columbia Business School, where I teach, and I wanted education to very much be in the mission of the organization. So I combined all of those things, investing alongside women, investing in male and female founders, and then grounded in education, and that was 37 Angels.
Awesome. One of the things that I love about 37 Angels is that rigor of education. I went through it. I loved it. I always recommend it to so many ladies who want to get that rigorous education around angel investing. What have you found in the last couple of years that really define what that wonderful female angel is? How does she invest differently? Can you talk about that a little bit?
Yeah, so if I think about the ethos of 37 Angels, and I think a lot of it comes obviously from our investors, is if you read the testimonials about 37 Angels from founders, they say things like we're efficient, we're transparent, we're helpful. But what's really amazing about those testimonials is that 75% of them came from founders who we rejected. So we said, nope, we're not going to fund you. And then they turned around and wrote us a positive testimonial because that process was so, maybe not pleasant, but painless to get through. And so I think there is something around that incredibly collaborative nature that the women in our network bring. And that is partially because 40% of our investors are former founders. And so we get what it's like to be on the other side, which is why we understand how important that efficiency and transparency is.
That's wonderful. I know that I'm also really focused in on that entrepreneur and making sure that connection is so real. How do we as angel investors really make a better educated investment in that entrepreneur as a female angel investor? How do we do that better? How do we really go, hand in hand with that entrepreneur so that they can succeed better?
Yeah, so I think there's kind of pre-investment and post-investment. I think pre-investment, the number one thing you can do is to just be really honest and really not waste that founder's time. And so sometimes we know after a 20-minute phone call that it's a no. And tell them. I think investors, male and female, just hate saying no. And so founders get a lot of maybe, come back to me in 3 months, you're too early. And I've been on the other side of this, as I'm sure a lot of the folks listening have been. And that's the most frustrating place to be as a founder, is to not really be getting a straight answer. So I think before the investment, just letting people know as soon as you know, whether it's a yes or a no, and not kind of stringing founders along. And then post-investment, we try really hard to have as much as possible a single point of contact. And the reason why is because angels, especially earlier angels, are what I call aggressively helpful. And they so want to offer advice, but I think it's really important for us as investors to be cognizant of the fact that this founder has maybe 20 angels trying to help them. And so how do you help them in a way which isn't overbearing? And so we always ask founders how they need help. A lot of the times it's introductions, but always introduce them when the founders are ready for that introduction.
I love that. Let's break that down into the pre-investment aspect of it. I know that period of meeting an angel investor and then getting that check is sometimes a little bit long. So I also respect the entrepreneur and say, I don't want to string them along, but sometimes it does take a little bit longer in a group. Let's say Hera Angels, it does take a little bit longer, maybe 37 Angels as well. How do we as angels mitigate that period and help that entrepreneur understand that it is a little bit longer than expected maybe?
So I think anytime you've got a group of angels, you need to have a chief cat herder, right? So you need to have somebody who is really responsible for moving the process along and just setting deadlines, right? So for 37 angels, we say that we will get back to the founder within 4 weeks of pitching. And that means that somebody is on that diligence team is just responsible for saying, okay, this week we're going to ask questions about the team. This week we're going to ask questions about the business model. We are going to commit to writing a diligence memo and making a decision by this date. And it's really just around cat herding. And there's no magic sauce, but I think it's just about people committing to saying, look, I know I'm incredibly busy. If you don't hear from me by this date, then move on without me. And I think a lot of that comes with trust of your fellow angels, right? And so getting to know people whose opinion you trust. And so maybe you weren't on the call with the CTO, but you know that so-and-so was, and you trust her when she says, you know what, this CTO knows what they're talking about. And so I think that's why networks are so incredibly important, because it is a more efficient way to invest.
And then the post-investment aspect of it, I know that as an angel investor myself, I love making those introductions. Of course, I love how you say when the entrepreneur is ready, but also that I love communicating with an entrepreneur as much as possible so that when I am in a room that I can make that introduction or, some kind of connection, I'm able to do that. As a, let's say, single angel investor, how do you ask that entrepreneur, hey, I really would love monthly recap of what's going on so that you are more aware of what their needs are? How does that work and how can we better do that?
I would state that up front, right? I'd love a monthly or a quarterly update. These are the things I would like to know about. So I'd love high-level metrics, revenues, key accounts that you landed, blah, blah, blah. Second thing I'd like to know is what's your burn rate and how much money do you have left in the bank? Because that's a really important number, certainly for the founders to know, but also for the angels to know, because, hey, maybe we need to help them be finding more investors. And then the last thing I always ask them to share is how do they need help? And founders are actually sometimes not great at asking for help. And so we as angels have to encourage them to say, look, I know maybe you think I'm busy, but if you articulate, I need help finding a graphic designer, or I need help finding chief marketing officers at consumer products companies so we could sell them our product, that way I can be helpful. And I think telling the founder that's okay to ask for that help is definitely step one.
That's awesome. Now, with those pre and post wonderful lessons, who or what are your best success stories at 37 Angels in that pre and post aspects of investing?
I'll start with kind of financial wins, right? So we've invested in 44 companies in the last 4 years. We've had 9 Series A's, 2 Series B's, and 5 exits. And so I'll give you an example of Board Vitals, who they got acquired by Ascend Learning about a year ago. Dan was really great at leveraging his angels. I always got, every month or two, a really thoughtful email from him. Exactly what I just said, right? Here are key metrics. Here's our kind of financial situation, and then here's how you can help. And he was very precise on how he wanted to be helped, right? I want this type of person at this network. Sometimes he'd even gone through my LinkedIn profile and said, you know these 7 people, can you make an introduction? And by the way, I'll write the intro for you. And the same thing happened when he was going through the acquisitions process. We knew it was happening. He said, do you know this type of person? Because that would be our potential acquirer. And every step of the way, he leveraged the Rolodexes, if people still use that term, of his network really thoughtfully in a way that wasn't intrusive and in a way that didn't take up too much time of the investor.
Wonderful. I love that. And anything else about, let's say, is it the product? Is it the founder that made the difference? Obviously, the founder made the difference in this success story. Any other things about anything about what we decide as an angel investor to invest in that startup so that we can bank that better investment as a story, as an example?
Yeah, I mean, the framework we use when we're diligencing startups is the 4 Ps. So we look at the people, which obviously is the team behind it. We look at the problem they're solving, right? Is it a large problem? Is it a large market? Is it a market that we want to enter into? Then we look at the progress, and this is kind of product progress. How much revenue do they have? How many customers have they sold to? And then the last thing we look at is price. So are the deal terms attractive to us? People, problem, progress, and price. So that's what we think about kind of going into it. And hopefully, if all of those things are awesome, that's when we invest.
Wonderful. I love that. I call it the 5M. So it's kind of the same thing. That moment, that momentum piece is so important too, of how are they doing? What have they been able to achieve? So after those 4 Ps, what are the other advice that you can give to angel investors that are looking into this asset class to actually activate their capital?
Oh, that's a big question. I think one is there's just kind of this mental preparation of committing to this asset class. And what I mean by that is the first thing I would do is before you write a check, just spend 3 months kind of immersed in the ecosystem. Go to an event a week, hear, 5 pitches a week, and just kind of learn the energy and the players and all that kind of stuff. So I would say that's kind of step one. Obviously, I would encourage you to take the 37 Angels bootcamp. We have it both in New York and online, would be another thing to get educated on the process. I would also try to find a tribe. I think it's really important to find a group of people. It doesn't necessarily have to be an angel network, but even if it's just 3 other people who, once a month you guys get together over wine and just discuss a deal, or because it is interesting type of investment and that it's much more emotional and personal than it is like investing in the stock market. So I think having a tribe of folks to talk to about it is really, really helpful. And then the last thing I would say is when it comes to diligence, even though we look at the 4 Ps, the most important one really is the people behind it. And so as you are diligencing, don't just look at their business plan, but say how did they respond to that question? When you challenge them on an assumption, are they defensive or are they open to hearing your feedback? And so how the founder goes through diligence in terms of working with them is almost as important as the answers, because you are going to be working with this founder for 5 years, 8 years, maybe 10 years before they have an exit. And so you want to enjoy being in a boardroom with them.
I love all of that. One of the things that I love about how I got to know you and how you were a mentor to me is that you were a mentor. So all of those things are wonderful. I think also finding somebody who can mentor you through, I think the first investment that I made had you on the call saying, how do I do this? Is this the right decision? So you walked me through certain things. Is that another piece of the puzzle, is finding, let's say, a colleague that you can talk to?
Absolutely. I definitely think, you should have people kind of going along with you in the process, but ideally you have somebody who has done a handful of investments and can walk you through the process. Doing something like the legal stuff, I think is very helpful. That being said, the one thing I wouldn't do is put too much credence in someone who maybe just is 2 years ahead of you in the process. I think much like stocks and a lot of things, there's a lot of data to show that if someone tells you that they are great at picking unicorns, I would walk away from that person. And the reason why is because most of us, even the ones that are the most successful in this ecosystem, we do get it wrong 2/3 of the time. Meaning 2/3 of the time we write a $10,000 check or a $25,000 check or a $100,000 check, and that check goes to zero. And so I just think it's important that yes, we should talk to mentors and we should learn, but we should also recognize that this is a high-risk asset class where no one really knows what they're doing. And that's kind of the fun of it. And so I say, yes, find those mentors, but also acknowledge that we're all incredibly fallible.
I love that, because that is great advice. But every single person has a personal investment thesis. What is your personal investment thesis? It might be the same as 37 Angels, but how you write a personal check.
For me, it really is all about the team behind it. And I would say the two things that I really look for in a founder is I look for empathy and I look for hustle. And those two words have a lot of things behind it. But, something that I'll often do, I have a sizable network, and usually I can find a way early on in a diligence process, if I'm excited about a founder, to say like, hey, I have a potential client for you or a potential board member for you or somebody, especially if it's a revenue generating client, that I'll just mention that I know so-and-so here, they would be really interested in this product. And I see if they follow up. And if they don't, it worries me, right? Because that is, especially if it's a big potential client and they never follow up, it means that they probably don't have that hustle or they lack the organizational skills, something. But sales is so vastly important to the industry. I don't care if you're B2B, B2C, what industry you're in, you have to be good at sales. And so that is something I really look for, that hustle. And then that empathy piece goes back to how do they handle diligence, right? So are they thinking about all of their customers? Are they thinking about their employees? Are they thinking about their investors? And really having that multifaceted lens in their approach to communications is something I really look for.
And what are the red flags that have come up over the years that you're like, I'm not going to invest in that company?
One that comes up a lot is competitive landscape. We always ask, who are your competitors? And I see the mistakes that founders make be just that they don't have a complete competitive landscape. They often define competitors as very, very direct competitors. And so an example I often give is digital cameras, right? So if you'd asked 10 years ago, Olympus, who are your competitors? They would have said Sony, Canon, Nikon. I don't know that they would have thought that smartphones would become a competitor. And so we look for a founder who truly understands their competitive landscape in terms of indirect competitors, acquirers, partners, both now and in 5 years. They don't have to have a visionary detail of every last one, but they have to have a sense of kind of how the industry is emerging. And so that's one. And then sometimes you just don't know about certain competitors. And so if I can do a 30-second Google search and come up with a competitor that you weren't aware of, that's a big concern. So competitive landscape is definitely something that we probe pretty thoroughly on.
Being a visionary as an angel investor is also important. So what do you see in the next couple of years that would be some of the startups that are going to be emerging out of any of the markets that you have invested in?
Yeah, so I think a big trend is artificial intelligence and I think around machine learning. And so what I think is really exciting about artificial intelligence is 2, 3, even 5 years ago, first of all, the hardware wasn't sophisticated enough to handle the processing needed. And now it is. But even more importantly, I think artificial intelligence used to be about our robot overlords, right? And these days, artificial intelligence is really about practical cost savings. So if you think about Amazon, and all of us have ordered off of Amazon Prime and gotten this huge box for an SD card, we're like, why on earth is this happening? Well, the reason why is because they figured out through their algorithms that only having X number of box sizes saves them millions of dollars a year. And it's such a simple application of artificial intelligence, but those type of applications are really exciting for us to be thinking about because it's practical and it's truly adding dollars to the bottom line. So that's certainly one area. We are also definitely looking at the space of virtual reality. So if you think about virtual reality in 3 layers, you've got kind of the content layer, the games, the videos, you've got that software layer that's enabling it, and then you've got the hardware layer. We are less interested in the top and the bottom layers because content is really tough for me to predict what's going to be the next Angry Birds or Candy Crush. And hardware is also tough for us to invest in because it's driven by forces that are sometimes outside of our control. But that software layer is incredibly interesting to us.
That's awesome. One of the UCSD students that we have incubated in the basement is actually in virtual reality. The company's called Nano, and they're just doing an amazing job of being part of that software line, but then also being able to get software into biotech companies to look at how their molecule is being worked with, in that virtual reality aspect. So it's just fantastic coming out of university. So that's awesome. Going into that university. Yeah, go ahead.
The one thing I wanted to add about trends, though, is while we and myself, I keep very abreast of them, I also try not to pay too much attention to them. Because first of all, typically if something is sexy, it's overvalued. So it's harder for us to make the returns that we need. And the other thing is founders know these trends as well. And so if I think, 10 years ago, it was all about kind of big data and every pitch had the word big data and then we're going to sell our data at the end of it. 5 years ago, it was Internet of Things. Right now, it's artificial intelligence and machine learning. So I also tell angels and founders not to get too swept up in it because it can lead to you overpaying for technology as well.
And going down that route, one of the things of overpaying is that in different areas of the United States, there's different calculators, basically. In New York City, where you are, there's one calculator of that valuations, and of course, Silicon Valley. But there's also other pockets in the United States that we're trying to figure out that calculation. And some of the angels are in those areas. Can you give us any advice on how to do that valuation better, or anything around that valuation aspect of investing?
Yeah, so first of all, three resources for you. One would be AngelList. If you go to angel.co/valuations, they have this really great interactive tool that actually lets you see how do valuations look like in Des Moines, Iowa versus New York City versus San Diego. So that's great. Angel.co/valuations. And then the other two great resources are PitchBook and Halo Report. PitchBook and Halo Report. Both of them do a quarterly infographic that tells you all of these things: average valuation for seed, Series A, Series B, and so forth, what industries are getting funded, where are the exits happening, and it's a great kind of quarterly snapshot of all of these things, which allow you to be really well informed in an easy to digest way. So those are the resources I would suggest.
Wonderful. I look at those all the time as well. I love that because I need to be that visionary person of going forwards and looking at that as an angel investor, but then also figuring out in your ecosystem who are the players. As you said in the advice of how to get an angel investor, writing that first check is learn the energy of the ecosystem. I love what you said about that. And what other advices can you give about reaching out and learning about the ecosystem, but also being a player in that and making that ecosystem better?
Ooh, that's a great question. So I would say the folks that you should definitely know are accelerators are a great place to go. What is an accelerator in your local ecosystem that is educating the startups? And so that is definitely one place I would go to start. Angel networks would be another one. And then, I mean, I'm a little biased here, but certainly I think universities are another great place to go just because there's so much talent coming out of that. By the way, if you want to know all the accelerators in the US, you can go to F6S, F like Frank, the number 6, S like Sam. And if you just Google those F6S, they have all the accelerators in the world listed. And so you could say, I want to know a hardware accelerator in Dubai, and you could find it there. And I think that's probably where I would start, accelerators or angel networks. I think if I was brand new to the ecosystems, I would start there.
Yeah, and F6S is really great too because a lot of the accelerators have their applications on there. So if you are advising, as we were talking about that post-investment aspect of being an angel investor, is that you can actually suggest to that entrepreneur to apply to that accelerator in Dubai. Let's dive into a little bit about that university aspect of it. Congratulations on being the head of innovation commercialization. What are you finding in the university setting that can help angel investors really kind of get that new talent or get that new idea?
So I think that universities, I'm trying to think the best way to get involved with the university as an angel investor. So most universities have a tech transfer office where that is the whole goal. They're taking the technology that's incubated out of the PhD programs, out of all the different master's programs, and helping to commercialize it. So that's probably where I would start if you're working with a university. And then I just find universities just throw great events. And so if you want to hear about a deep dive on what's happening in fintech or in edtech or investing in, social enterprise in India, there's get on the newsletter of whatever local school you're at. And it's just such a great way to stay abreast of certain topical and industry areas as well.
I also find that wherever you graduated from sometimes have alumni networks. Let's say like Wharton Angels has that, kind of connected with them in that area, but then maybe you're living someplace else and you can become a mentor of that accelerator in that university. So there's a lot of different ways of let's say connecting into that. But tech transfer is a huge way to get that access to that talent and that
Agreed.
knowledge base.
I will say though, if you're a new angel, I wouldn't start with the university tech transfer office. That's probably not the first place that I would go. I would say you need to be a little bit savvier. I think know the ecosystem a little bit before you kind of try to work with the university tech transfer office.
Great point. Anything else that you want to kind of dive into that you've seen through educating angel investors?
I think the one thing I would say, especially to women angels, is I see this over and over again where I see a woman who's maybe invested in 4 companies and she'll say, I'm not an angel investor. And then I'll see a guy who's written 1 check. 3 years ago, and they wear that kind of angel investor hat. And so I would just encourage folks, like if you're doing it, just to be vocal about it and say it proudly. If you're not quite ready, just give yourself a commitment to go to one startup event a week. Like that's the ask. Because I think it can feel incredibly scary to say like, I'm going to angel invest or I'm going to do this. And it's obviously a risky investment class. But I think saying I'm going to go to one event a week is not a scary thing. And find a buddy, because it's awkward to walk into a room with 200 people who you don't know. So find someone to go with. And I think just dipping your toe in, it is such an incredibly fun ecosystem. It's a collaborative ecosystem. I learn every single day. And so I would just say take that first step.
And also, I think it's scary when you do take that first step and then you publicly say that you are an angel investor, you feel like you're going to get a flood of information or flood of entrepreneurs coming to you. How do you advise female angel investors to kind of get out of that shell and it is okay to go that route?
Yeah. So what I would do is decide upfront, like how much time do you really want to invest in this a week? And so you could say, look, I'm happy to meet with founders, but I only meet with them on Fridays from 2 to 4 p.m. Right? And that's when I take calls. And so I would set some guidelines for yourself because it's a valid fear, which is if you don't put those kind of guidelines around, you could very easily get your life taken over, right? Our angel network looks at 2,000 deals a year, right? So that is a lot of time. Now, obviously we have a team that's doing that, but you can very quickly become overwhelmed. So I would maybe before you put it on your LinkedIn profile, just think about it and say, like, how much time do I really want to invest in this? And then try to keep yourself honest with that. And again, this is why I think finding a tribe is so great. You're like, you know what? I can't take a call, or maybe I don't know the space that you're in, but I know somebody who does. And that way you're not saying no, you're saying no, but here's an introduction.
I love that. So I usually end the podcast with 4 rapid fire questions. So the first one is, what's your favorite angel investing resource?
Other than the bootcamp we developed, I would say my favorite angel investing resource is there's a funny PDF that's called the VC Rejection Form Letter. And it's both a fun read, but it's also really informative of all the reasons why VCs say no to founders. And so it's the VC Rejection Form Letter.
I love that. I also send a lot of female angel investors to 37 Angels. So I really highly recommend 37 Angels and how you have been able to have that virtual aspect of that acceleration model is by far wonderful. I had a great experience and I encourage everybody to go through that boot camp.
Thank you.
The second question is, what's your favorite book?
Oh, these are such tough questions. So I actually get asked this question so much that I have a PDF slide of like my 20 favorite books, but let me try to pick one. I love The Power of Habit, which has nothing to do with angel investing, but it's all around kind of forming keystone habits in your life and how they amplify everything, both positively and negatively. Power of Habit.
I love that. I'll get that PDF from you later. Who has been a major influence in your life?
One of my business school professors, his name is Hitendra Wadhwa. We actually started a company together, and he was an inspiration in the classroom. He is also a successful entrepreneur, so he was an inspiration also as a founder, and he's a dear friend.
And the fourth one is, what does abundance mindset mean to you?
That is a great question to end this on. Abundance mindset is about kind of believing that what you do is unique, right? And so something that we are proud of is we promote our quote unquote competitors, meaning there are other people in the space, certainly other angel networks, other angel education resources. And I actually tweet about their events. I tweet when something goes well for them. And people were really confused in the beginning. And I was like, because we're all doing the same mission, right? We all have the same goal in mind, which is to get more educated angels into the space, or more women angels, or more female founders, whatever the case may be. And so why not collaborate as opposed to competing? And it's one of the reasons why, Silvia, I love working with you, right? Because from day one, it was always collaboration versus thinking that we were in any way, shape, or form competitive. So to me, that's the abundance mindset.
And I think that's why we're having a rise in female angel investors and angel investing groups, because we are so collaborative.
Absolutely.
So thank you so much, Angela, for being on this podcast. I so appreciate your time, your talent, and your treasures. It's just been wonderful being your colleague in the last couple of years, and then, of course, hearing even more advice over this podcast.
Thank you so much for having me. It was a pleasure.
Thank you.
We had the pleasure of having Angela Lee on the She Invest podcast. She is the founder of 37 Angels, which is one of the premier angel investing boot camps out there for women angel investors across the United States and globally. It is actually a virtual accelerator, so anybody can get this rigorous education. In the podcast, she went through a lot of advice for female angel investors and for entrepreneurs to be able to have that interaction with an angel investor. But two things really actually stood out to me. One is looking at the 4 Ps that she considers whenever she looks at investment as the CEO of 37 Angels and as an angel group in general. 4 things. 1 is people, 2 is problem, 3 is progress, 4 is price. First thing is people. Who is the team? Are they good in executing what the startup would like to do? Secondly is the problem. Is it a large enough market, or is it a market that they would like to go into as an angel investing group? Third is progress. What is the product and what's the revenue? Who are the customers? Have they gotten any traction there? And fourth is price. If the deal terms are attractive to them as angels. And then the other aspect that she talked about, which I loved, is how do you as a female angel investor actually get integrated into that angel investing world and dive into the angel investing asset class? There are a couple things that she recommended. One is learn the energy of your ecosystem. Go to a lot of events. She actually did a call to action of going out to an event every single week to understand what is that innovation ecosystem in your local ecosystem. Number 2 is educate yourself in the process. Be able to take the 37 Angels Bootcamp would be awesome, but really educating yourself on the process of angel investing and what to consider. Number 3 is find a tribe of like-minded women, because you can make better decisions as a team, as a group, because you are not going to have all of the expertise in being able to make that best decision for investing your money into that startup. And the last thing is do your due diligence, not only in the different aspects of diligence of looking at the founder and the product and the market and all those things, but how the founder goes through the due diligence process is equally as important, because you are going to be partners in growing the startup together with the founder for the next 5 to 7 years. So that way of how they interact with you, how they interact with all of the questions, answer those questions is equally as important as to what are the answers to those questions. It was an invigorating conversation with Angela. Just blessed to have her part of the She Invest collective.
Thank you for listening to and subscribing to the She Invest podcast. Go on over to sheinvest.com for the full show notes for this episode, as well as any resources, websites, and opportunities mentioned during the show. Sign up for the sheinvest.com newsletter to learn about events like our annual Hera Venture Summit during the month of September and our She Invests monthly investor circles. Thank you for your time, talent, and treasure.